Good evening, friends. Welcome to my yesterday's analysis of Bank Nifty. So market opened the gap up actually here. It received after receiving support from 50 MA. Then there was yesterday's resistance here. Resistance, it was in the resistance zone of yesterday. So it came down. There was a rejection from the VWAP band, and it came down, came back to 50 and 100 MA. Typical case actually. It came back to 100 MA, and from 100 MA it received support. So it received support from 100 MA here, and again here there was support from 100 MA, and market started going up. So at this point, so in this candle, there was a bullish crossover of 21 and 50 MA, and they both were in the inside the VWAP band, and there was a crossover angle also here. Bullish crossover of 21 and 50 MA with the VWAP band. This is the VWAP band, and there was a crossover angle also between 21 and VWAP band. So this candle, I entered into a call trade and I closed my trade. Actually, I entered in this candle, which I should not have done, because in this candle the 21 MA was not clearly visible above the 50 MA. So this was a trap. Market fell actually for some distance after this point. So this is the right entry candle. I should have entered in this candle when there was a crossover angle between 21 MA and the VWAP band. Then this is the exit candle actually. So this is the exit candle. Instead, I wrongly entered in this candle. There was a dip, and then I exited within 2 minutes in this candle actually. So in this candle I exited within 2 minutes, but this is the right entry candle for this trade. I entered here only, which is wrong, because 21 should be clearly above the 50 MA. Clearly above the 50 MA it should be visible, and there should be a crossover angle between 21 and the VWAP band. So I exited my trade within 2 minutes of entry here, which I should not have done, just covering some 10 or 20 points. But this is the right entry candle here, which clearly shows 21 above the 50 MA, and there is a crossover angle, and this is the exit candle, which is the target candle. So after this 21 MA crossed the VWAP band, there was no entry here, any candle, there was no entry here. So I waited for 21 to come to the VWAP band. So see, this alignment was like this, so I was little afraid of the 21 MA, sorry. So this candle, full body candle connected to 21 EMA and the VWAP band. Full body candle connected 21 EMA and the VWAP band. Both were connected by this candle. So after this, there was one small, there was a candle after this point. So this is a valid trading location as per my setup. So this is a valid trading location. If I try to trade too many times, it will not work. See, this is not. This cannot be a good candle. This cannot be a good entry candle, because I see that the opening of the candle is above the VWAP band, but the full body of the candle should cover both the VWAP band and the 21 EMA very clearly like this. Only then I can see one more candle after this point. So I traded this candle also. I traded this candle, uh, and I closed my trades. So this was about the trades, yesterday's trade. So coming to the observation of trades. So market went up after coming to the 100 EMA. After coming to 100 EMA, market started going up. So after the crossover here in this candle, this is the target candle. After this, market fell down, and there was a connection actually between 2150 MA, and I see that there is a crossover angle also, a little crossover angle here between 21 and 50, and market went up to the VWAP actually. So even this one is also a valid trading location actually. So this candle which connected 21 and 50 inside the VWAP and will go up to VWAP. So this is also another trading spot, trading location here. See, after this I observe that after this crossover, actually bullish crossover of 21 and 50, so this is the crossover candle and this is the destination candle. So here this is the crossover candle, and this is the target candle. Crossover candle and the target candle. So here this one, this candle which connected 21 and 50 MA, and there is a crossover angle between 21 and 50 MA here. So this is a crossover angle which is fairly a good angle between 21 and 50 MA, 21 EMA and 50 MA. So crossover angle between 21 EMA and 50 MA. So this is the crossover angle, but after that this is the VWAP band. So after receiving support from 100 EMA, this candle was formed inside the VWAP band, and there was a good crossover angle between 21 and 50. So this went up to the VWAP, So the guaranteed. So there is one more candle after this point. There is one more candle after this point. So there was one more candle after this point. After this point, I see that there was rejection from the VWAP band, and market came back to 21 EMA again. Market came back to 21 EMA and it received support from 21 EMA again. Again it went up to, this time it went up to the VWAP band. So these are some of my observations today. It received support from 21, it came back to 21 EMA after rejection from the VWAP band, and it went up to the VWAP band. So market went up to the VWAP band in this case. Market went up to the VWAP band and it started, the market started getting rejection from the VWAP band. So this is the first rejection. So it tried to break the VWAP band, it went above the VWAP band here, first case. That rejection again here. So this is up, this is down, again up above the VWAP band, again down. So market came back to 21 again. I see that the market came back to 21. It again there was support from 21 EMA. Though it touched the VWAP band, it went a little above the VWAP band, because in the previous two cases also market had gone above the VWAP band. Similar pattern followed. So I see that there were two candles here. First entry into VWAP band, second entry into VWAP band, two candles, and after this there was So after this point again there were two candles above the VWAP band. These two candles actually. So two candles closing above the VWAP band. In the first case also two candles closed above the VWAP band. Second case also two candles closed above the VWAP band. Third case also two candles closed above the VWAP band. But this is a valid. It fell from the VWAP band to 21 EMA and there were two candles, and after that it fell back to 50 EMA. See, this time it was a trap. This time this candle is a trap. So I would expect a similar movement after coming back to 21 EMA. We will think that market will again go above the VWAP band, but it is a trap. Instead it went to 50 EMA. It received support from 50 EMA. It connected these 21 and 50 EMA. This candle connected 21 EMA and 50 EMA above the VWAP. So this is the first candle. Also, this is the first candle after the crossover of 21 EMA. After 21, 50 EMA crossed the VWAP band. So this is the 50 EMA. And this is the 21 EMA. So this is the first candle. This is a trap. So two candles here. Similarly, two candles and two candles. Two candles and two candles here also. So here, this is the first candle after the 50 EMA crossed the VWAP. So this is the first candle, and also this candle, though it is not a full body candle connecting both the 21 and 50 EMA, though it is not a full body candle, so there were some down, there was market reversed for some time again. It came back to 50 EMA, but this low was not breached actually. This low of the candle was not breached. It went up. So this is a connecting candle. Though it is not a full body candle, but it can be considered a connecting candle. Connecting candle connecting 21 EMA and 50 EMA. It went up to the VWAP. It went up to the VWAP band. So and then market started moving sideways. Market went sideways after this point. So you can see that there is a after this entry into above the VWAP band, there were no two candles. There was no one extra candle actually. See, there was one extra candle here. There was an extra candle here. There was an extra candle here after this. After moving above the VWAP band, but there was no extra candle in this case. But the market started moving in the sideways, and market received support again from 21 EMA. It went above the VWAP. This time it went above the VWAP band. This time when 21 EMA came very close to the VWAP band, it went up. I see that this is a full body candle connecting 21 EMA and VWAP band. So this is a full body candle. Full body candle connecting 21 EMA and the VWAP band. So 21 EMA and the VWAP band, full body candle connecting 21 EMA and the VWAP band. Though it is not completely covering the VWAP band here, 21 EMA, it does not completely cover 21 EMA like this, and the wiki should have been here. So it is not completely covering it, but after support from 21 EMA, market went straight into the above the VWAP band, and from here there was slump movement. Here I can see a big candle after this point. Here after this point there was a big candle here. It went up to this point. So this is above the starting point actually. So this was the starting point of this was the starting point. This was the high when market started after a gap up opening. This was the high. So market crossed the high actually here. Market crossed the high made by it in the morning when market opened the gap up. It crossed the high. It went up to until this point and it came back again. Market again came back. So market came back after reaching this point. It broke this point, but there was no 21 EMA. See, I observed that 21 EMA is too far from this point actually. So there was a crossover of 21 and VWAP band, but 21 EMA is too far from this candle. So it is not a proper breakout actually. So market returned after this point. Market returned back to 50 MA. Market returned back to 50 MA. See, it received support from 21 here. Then market came back to 50 MA to take support from 50 MA. It took support from 50 MA. Again it went up. Again it went up. This is what I am observing here. So I see this pair of candles here. This pair of candle is a let me see what it is. Is it a bearish engulfing candle? So this is a tweezer top candle actually. This is a tweezer top candle here. This type of structure is a tweezer top candle. So after this tweezer top, market starts going down. If there is a tweezer top structure like this, see after an up move, there is a tweezer top and market starts falling from the tweezer top. So here this structure is a tweezer top pattern. So after the tweezer top, I see this is a tweezer top pattern here. So blue candle and followed by a bigger red candle. So this is a tweezer top. Tweezer top. So this is a, I observe that this is a tweezer top. So after this point, market started falling back to 50 MA. See, I see there were 3 candles here continuously. After the tweezer top, there were 3 candles. So let me see what is this. Three black crows. Candlestick chart pattern. Yeah, even this is also similar to the 3 black crows chart candlestick chart pattern here. 3 black crows. So this is open within the body of the previous bar. open within the body of the previous bar but close lower. Open within the body of the previous bar but close lower. Okay, so this type of structure is a 3 black row structure. Here I see this 3 black rows, continuously 3 candles after this point. After a blue candle, continuous 3 red candles. It's also 3 black rows pattern. So what is a tweezer top? Let us first see what is a tweezer top. So tweezer top candlestick occurs when the high points of two candlesticks remain the same after an uptrend. It refers to a bearish reversal. Tweezer bottom refers to bullish reversal trends. So when the high points of two candlesticks remain the same after an uptrend. So here the high points, nearly high points remain the same actually here in this case, nearly same. Tweezer top and also the 3 black rows pattern here. 3 black rows. This should have opened inside the body of the first candle, but it did not open inside the body of the first candle here. It is after the closing of the first candle. So then this qualifies as a tweezer top. So this is a tweezer top pattern as I told earlier. So what is a 3 black rows pattern? The 3 black rows is a technical analysis tool traders use to identify potential reversals in the market. It is formed when 3 consecutive bearish candlesticks appear, indicating a shift in sentiment from bullish to bearish. So 3 consecutive bearish candlesticks appear. So this even qualifies as a 3 black row pattern actually. It is describe a bearish candlestick pattern that may predict the reversal of an uptrend. Candlestick charts show the day's opening, high, low and closing prices for a particular security. For stocks moving higher, the candlestick is white or green. So 3 white soldiers is a bullish candlestick pattern that is used to predict the reversal of the current downtrend in a pricing chart. The pattern consists of 3 consecutive long-bodied candlesticks that open within the previous candle's real body and a close that exceeds the previous candle's high. So this doesn't come under 3 black rows, though, because this candle, the second candle, is not inside the body of the first candle. It is after the closure of the first candle that the second candle appeared, so it disqualifies as a tweezer top. Because the highs of the 2 candles are nearly the same. So this is a tweezer top and also a kind of a 3 black rows pattern. So there were 2 confirmations here, 3 black rows, nearly 3 black rows pattern. So market went down after this point, after this point market went down. It received support from 21 and a little support, but it came back after this point. It came back to 50 MA. So you can see, I see that the market closed below the 50 MA like this. Closed below the 50 MA. Once it closed below the 50 MA, it started going up again. So market started going up again like this. So it received support again from 50. It went up to the VWAP band at 21 EMA, Again there was rejection, forming a higher low. So this is this is high and low, and then it went up, actually forming higher high, forming a higher high. It went up. So first this was from 50 MA, it went up until this point, until there was a tweezer top pattern. So this is a tweezer top pattern here, and market came back to 50 MA. So this time this first time candle was inside the 50 MA. This time the body of the candle, 3/4 of the body was was below the 50 MA. So it went. So here I could have waited for this candle actually, which is completely inside the 50 MA, which is completely inside the 50 MA. So it went up to 21, came back, and then it started going up. From this point it went up, forming 3 white soldiers. But this doesn't qualify as 3 white soldiers because one body of the first candle is not inside the body of the second candle. It doesn't begin inside this body of the second candle, but this is nearly a 3 white soldier pattern. But it is not 3 white soldier, but it is kind of like continuous candles, not a 3 white soldier pattern, but it is a continuous pattern here, continuous 3 candles here after this point. So this is important actually. So when market, this is the complete candle is not inside the body of the 50 MA, inside 50 MA. Here complete body is inside the 50 MA. So there was a rejection from 21. So after a rejection, so it went up. Usually people call it as retest. So this is usually called as retest actually. So market went up for some time here. So this is important for me because there was continuous movement after this point. So market connected, and also this point market connected 21 and 50, 21 EMA and the VWAP band, full body of the candle with its body. The candle connected 21 EMA and the VWAP. So market went up by 2 more candles here after this point. So this is important for me as a scalper. And then market again came back to 100 EMA this time. See, this time market came back to 100 EMA. First time it market came to 21 EMA here. After the crossover, what happened after the crossover of 21 and 50 MA? Market came back to 21 and 50. The candle connected 21 and 50 both. So this went up to the VWAP band, and market came to 21 EMA, and again it went back to 20 above the VWAP band. This time it came to 50 MA. It went up until it found the tweezer top pattern here, and then it came back to 50 MA. It went up from 50 MA. This time it came to 100 MA. It went up from 100 MA. It went up after receiving support from 100 MA. So market so connected 21 and 50 both together candle. It went up to and it came to 21 EMA here. Sorry, it came to 21 EMA, and then market came back to 21 again 2 times. So then market went to market came to 50 EMA 2 times. See, it came to 50 EMA 2 times, and market came to 100 EMA. Again, I think it will come back to 100 EMA, and then it will go up. Again, I think it will come back to 100 EMA. See, market after connecting 21 and 50 here. Also, if I observe here, this is a tweezer bottom candle. I see that this is a low of both the candles are same here in this at this point. So I see that this is a tweezer bottom candle pattern here. Here this point. So tweezer bottom pattern. Tweezer bottom, yes, this is a tweezer bottom pattern. Same low, both have the same low. So this is a tweezer bottom, this is a tweezer bottom, both have the same low, and market starts going up from this point. This is a tweezer bottom pattern. A tweezer bottom is a bullish reversal pattern composed of two Japanese candlesticks with a matching bottom that appears at the bottom of downwards, at the bottom of downtrends. So this happened after a downtrend actually. So this happened after a, this pattern was created after a downtrend here. So it is not a complete downtrend. It is here actually. So this is a bullish engulfing candle or a tweezer lows. Low, both low must be same. Here both low of both the candles was not same, nearly same actually. So there was a reversal from here again here. Low of both the candles was nearly same. So market went up again here also in this candle. Low of these two were nearly same. So market went up from this point. Tweezer bottom pattern. Tweezer bottom pattern. So the tweezer bottom candlestick pattern is a bullish reversal pattern that can be spotted at the bottom of a downtrend. It consists of two candles where the first candle is in line with the bearish trend while the second candle reflects more bullish market sentiment as the price was higher in the opposite trend. So this is similar to a tweezer bottom pattern here. This one, lows of both the candles are nearly the same after a downtrend. But I should have located the candle somewhere here. But why I'm considering this point, this was a valid point because there was a bullish crossover of 21 and 50 MA. So this is a valid point here. So this I can call it as a tweezer bottom pattern, bullish pattern. Tweezer bottom bullish pattern. So from this market went up, it came back to 21, it went up again, came back to 21 two times, it went up again. So market came to 21 two times, and market came to 50 two times, and market went to 100 only one time. I think market will come back again to 100, take support and go up again. Market may again come back to 100 once, and then it may go up again before falling to 200 EMA, before falling to 200 EMA. So I can expect one more wave like this which will go up to, so this wave came to 20, 100, from 100 up, and again there is some rejection here, again it will come to 100 here and it will go up. After that it will come fall to 21, 200 EMA. After this it may fall to 200 EMA. Or there may be a direct gap down opening which will touch 100 and go up, and then again fall back to 200 EMA. So this is the analysis of the Bank Nifty. So there is a rejection at this point actually here. So exactly at this point market went up. Exactly at this point, that is after receiving support from 100 EMA, it went up. So this is the first bottom and second bottom, market went up. So this is a W pattern here, forming a W pattern. Uh, Usually after uptrend we search for an M pattern. So this is kind of a triple top. Market is forming a triple top here. So market will again come back to 100 EMA and then it will go up. After it is coming to 100 EMA, it will go up because 100 EMA crossed the VWAP. So it will go up a little higher and then come back to 200 EMA. So this is kind of a triple top pattern here. Triple top pattern. So what is a triple top? So this is a triple top pattern actually. So triple top neckline, this is the neckline, and this is top 1, back to neckline, top 2, back to neckline, top 3, and below the neckline. So triple top is a reversal formation. The technical analysis used to identify potential trend changes on financial charts. The triple top pattern consists of 3 peaks or tops that are formed around the same price level with troughs or pullbacks in between. This distinctive 3-peak shape signals that upside moment may be waning as resistance from sellers strengthens. So market is going to come down actually after this point. As the name implies, the defining characteristic of a triple top is 3 attempts by prices to rise above certain resistance level. So market is forming a triple top pattern here. Nearly a triple top pattern, and this is the neckline. This is the neckline here. So market went up from this point, came back, went up again, came back, went up again. It will come back to 100 here again. 100. So after so this is the first come back to 100. If it comes back second time, again it will go up and then it will come back. That is what I am expecting as per the trend. See, first time it came back to 21 here. Once then first it came back to 21 here, it went up. Second time it came back to 21 and then it fell to. So there were 2 times it went up. It went up twice. So here also it may go up again. After coming back to 100, it may go up again and then it may fall like this to 200 EMA. So this is a kind of a triple top or a rectangle pattern, even a rectangle pattern. So this can also be a rectangle, bullish rectangle, bearish rectangle pattern. Rectangle pattern can be either bullish or bearish. Rectangle chart pattern. So this is the resistance line. So after a bullish uptrend, market is facing resistance and it is receiving support and then breakout, retest and breakout. So this is a bullish rectangle pattern here. It can also be bearish. Rectangle pattern can also be bearish. bearish rectangle pattern. Bearish rectangle pattern can also appear. So this is bearish rectangle appears only after a downtrend. So this is a bullish rectangle, but the result can be anything. It can either go up or go down. So bearish rectangle, what is a bullish rectangle? So bullish rectangle. What is a bullish rectangle pattern? A bullish rectangle pattern forms when the price of an asset consolidates between clearly defined horizontal support and resistance levels. To identify this pattern, you first look for the prior uptrend that precedes the rectangle. So bearish rectangle, bullish rectangle patterns are patterns that happen when prices take a break in a strong trend. They bounce back between two parallel lines before the trend goes on. So there is a bullish good or and a bearish bad type. This so it could be anything here. It is between two parallel lines. Again, it will. I'm expecting it to come back to 100 EMA. It will come back to 100 EMA. It will come back to 100 EMA, and again it will go up. So it may try to. If it doesn't break this resistance, it will fall back to 200. It will fall back to 200. So it can be anything actually here. So this was my analysis of Bank Nifty. So this is what I observed. So if you like my video, please subscribe to my channel. Thanks for watching.